be a fun one here today. A lot of people talking yield curve stuff because it's moving, and that's why we talk about it. And I love, first of all, I love that idea that it's like, oh, metals were moving a year ago, so we talked metals forever, and we made some great trades. Yields are moving now, and now we get to switch right on over to yields because the small exchange provides you a bunch of simple products that let you pick up different asset classes so easily. Maybe you can, before we dive into spreads and how to size them, maybe you can speak to how novel a concept that is, because coming from your space of professionally trading, Jermal, like it used to be like you're a specialist in stocks or you're a specialist in metals or a specialist in foreign exchange. You couldn't be a specialist in all of them. Now in 2021, you can. I mean, you used to be a specialist in specific stocks, like just like a sector or a handful of single names. Now you could trade everything, baby. It's nice.
I know, right? No, it really is. And like I said recently, I mean, it's always nice to be able to trade something when it's moving. I think you get to learn more. You get to see how it reacts to different other market stimuli. And just the ability to have, as far as I know, we're the only ones doing this with this type of ease, to be able to trade yields in this manner. I mean, you can't beat it. And it's been one of the best tools to add to my trading repertoire for sure.
And this is what Jamal's talking about when he says like how easy it is to add this. Just trading yields, because it used to not be this easy. As recent as 2 years ago, it wasn't this easy, where you have 2-year yields at a high. Since the pandemic broke out, 2-year interest rates are at a high, and you read about it online with the Fed chair people saying this and that, and the projected rate hikes in the future. What you have here in S2I, the small 2-year yield, is a product. Look at it. Yields are up or interest rates are up, synonymous terms there. And you read about it in Wall Street Journal or hear about it from Fed Chair Powell or whoever, the product is up. This is exactly what we talk about when we say it's easy to slip right into this. And not only is it easy to kind of look at, oh, okay, when it was trading at $1, that was 10 basis points. It got up to $2, that's 20 basis points. And now it's above $4 or 40 basis points. And how that relates to just, the rising interest rate environment, very easy conceptually, but also this product costs you less than $100 to trade. I can't reiterate this enough, how easy it is to get into interest rates, what's moving right now, and get your hands dirty. Just that's the best way to learn, right?
Oh yeah, man, I'm mesmerized by this chart. Look at this move over the last couple of weeks, 3 weeks since that last Fed meeting. What day was? I don't even remember. Had to be last 2-3 weeks ago. But look at that move. I mean, that tells you a lot, about the market and where we are right now. It's so amazing.
Absolutely. I mean, everybody wants to talk about crypto, and we have a great crypto product. So I'm not even going to, throw shade on the crypto industry. I've been dabbling back and forth trading crypto. This product's up over 100% in the last couple months. This is true movement here, true opportunity to trade back and forth. And, they got actually intraday, they got as high as 50 basis points or $5 in this product last week, Jermal, and then came back. And so this is what we love. We just love a market that's moving to both directions and a market that's so easy to access under $100. If you think rates are going up, you buy it. You think rates are going back down to zero, you sell it. It's really that simple. But I want to add a little complexity here and talk about yield curve spreads. Yields are actually, and correct me if you have a different experience here, but to me, yields are probably the both first asset class to have to really make a job of spreading or a true opportunity of spreading. And it's one of the best asset classes to conceptualize what a spread is, just because you have, like it says here, a curve of yields. You have a 2-year, a 10-year, and a 30-year. They're all priced in the same way, which is they're all yields. They're all percentages at the end of the day. And if one is moving up and the other's moving down, or one is moving down and the other's moving sideways, you can kind of trade them off of each other. And it's all in the same terms. It's pretty simple to pose a proposition like selling the 2 years and buying the 30 years. I mean, as a concept, wouldn't you say yield curves are one of the best places to go when just thinking about spreads and how you can get them done?
Yeah, and I think, I want to say, hopefully this is not too simplistic, but I don't think they're That's my whole point. It's rather simple. I feel like it's not a whole lot of complexity to it. Like if you were trading, different terms of volatility, I mean, there's a lot happening there, and it's just it's a lot harder versus. I feel like there's a lot more simplicity to trading this yield curve. And again, this is something that I've always watched I've always had to look up the idea of the different yield curves and look up, what's going on in the different durations. And we still always look at that classic yield curve chart. But, being able to trade it is a whole different element, man. Like, it's just really nice to have like real time, the real time ability to trade it. And it's so easy with our exchange.
Yeah, because you talk about even like stock spreads, and it's like, oh, I want to trade Coca-Cola against Pepsi. And it's like, well, they got different prices given how many outstanding shares there are, and they have different volatilities because Pepsi takes more swings and Coca-Cola is kind of a dividend paying stuff. And it's like, oh my gosh, that's enough already. With yields, it's kind of like the 30-year yield is at the start of the year, it's around 2%. Let's just round it off there. The 2-year yield at the start of the year is 10 basis points, which is 0.1%. Now, as we get to the end of 2021 here, the 30-year yield is still right around 2%, but the 2-year is all the way up. It's quadrupled in its rate there. And so it's really easy to these things are one for one. You can compare them in the same way that you visualize them individually. That is the difference at the start of the year between S30Y and S2Y was about 2 percentage points. Now it's about 1.5 percentage points. And that thing has just come in. That's called flattening. It's really just easier to visualize and get done at the end of the day. And this is exactly what I'm talking about here. You visualize the spread. It's called the TUB spread, and it's as big as it gets in terms of yield curve spreads because it's the opposite ends of the spectrum. It's the 2-year, which is very short term, and it's the 30-year, which is as long term as it gets here in the US. You ever mess with the TUB spread or what?
I never. And remind me again, what's the, I actually just realized the acronym earlier this year. I was talking to Pete, but remind me again, what does TUB stand for? Something, I know it ends in bonds. What are the TU?
T is for twos over bonds. And this is this is a little inside baseball, but I like to use these terms just because you learn the terms and then you can kind of throw them around. Yeah, the NOB spread is the notes, which is the 10-year over bonds. The TUB spread is the twos over bonds. And then
there's no TUB. Why not TUB?
Yeah. It could be TUB. I guess it's harder to say. TUB is kind of a funny concept, and I think it's as simple as that. And then there's the fight spread, which was Frank's bread and butter back at the Board of Trade, which was 5s to 10s. But all these things have these names, and it does
actually trade under the bonds, right? I feel like I'm being not Carell. I feel like I'm being what's my man's name? I'm blanking on his name. I'll get to it in a second. But I feel like we're doing this interesting interview right now where I'm asking questions I know the answer to just to mess with you. Why wouldn't it be twos under bonds? Like, why not? What's wrong? Why over?
Here's the thing. You're not going to mess with me because it can be whatever you want. You want to name it TOBs? I'm fine with that. I love it. And what's funny is actually the 5s to bonds is the FOB. I really think it's as simple as like a bunch of dummies like me were in a room and we were like, what do you want to call this thing? And it's like, well, F and B FOB sounds good as opposed to FUB. Oh, then we'll do 2s to bonds. That'll be TOBs. No. It doesn't sound as good as TUB. And that's it. I think that's as simple as it gets. I was
just trying to be a little Colbert on you. You know what I'm saying? Like, just hit you with questions.
There it is.
I know the answer, but just to give you the opportunity to answer. We're going to do that.
Yeah. What you call it? I'm going to correct this stuff. Actually, everybody give me a second here.
I mean, no, isn't that what it's called in our market? These are the quirky things in our market that you're going to have somebody go out now and say TOB to some 30-year trader, and he's going to look at you like, what's wrong with you?
That's fine. Yeah, guess what? That's the 2021 version of it. You don't know, and then the other guy feels like he's missing out on something. TUBs or TOBs, either way, you can see it here in the price action. You look at that y-axis, and it's nice because it's the same terms as the outrights themselves. It started at about $16, $17 worth of difference, got all the way, it's steepened to $21, $22, $23 of difference. And I have it priced in notional amount. So $2,000 or $2,300 in difference between the 2-year and the 30-year. And that's steepening that movement of the yield curve. The divergences between the 2s and the 30s is usually a healthy sign. Like rates are moving higher and they're steepening. But what's been really interesting and has kind of put a couple people off is now we're actually at the lows for this spread, given that interest rates on the whole are actually at their highs for the last couple of years of trading. Like I say, going back to the pandemic, 2 years are at their highs, but we're actually flattening now, which is putting a couple people off. And so thus there's a potential opportunity here to trade this spread. Now it is, like I say, the biggest yield curve spread that you can get. But what's really nice is looking at that y-axis, you've got less than $1,000 in movement on the entire year for this spread. So if you wanted to buy 30 years and sell 2 years and look for just $50 or $100 in profits or losses, that's very manageable. And that will probably play out over the next, week or so, as opposed to the traditional way to build these with ZT and ZB futures. That thing's going to be moving $50 or $100 every minute or so. And so while this is the biggest yield curve spread, you can still size it up relatively small, given how small the products are, which is nice.
So one clarification for myself and the audience, and then one question. When we talk about flattening, we're talking about 30-year coming in and 2 years rising, right?
Yeah, they're coming together. Rates are quite literally the yield. It comes from the yield curve is flattening. The rates are coming together there.
And then question: when you look to put this on, do you look at it do you look at certain environments to put this on in the market? Whether it's, whatever, let's just throw inflation, stagflation, whatever. Like, do you look at certain times of that? Or do you just look at this from the standpoint of this is the average of the spread over a certain time period? I think it's on the lower end of the spread, and now I'm interested in buying, or vice versa.
The second thing you said is what I do. And I put blinders on to almost everything else in the marketplace, which is extremely empowering and also builds consistency. And it's not to throw shade on people who do monitor inflation and these other things, but the last thing I'm going to do is be a mean reversion trader and look for price extremes. And then for, no good reason at all, there's always news on everything, whether it's crude oil at the highs, yield curve spreads at their lows, crypto at the highs and the lows. There's news on everything, and it can talk you in and out of a position anytime. My whole thing is always just like numbers, and I'm going to be consistent around those numbers. And this, just like you put very eloquently, is like the average is about $20 worth of difference. That 2000 number right there at the middle of the chart, it's all the way back down to $16 worth of difference, or $1,600 notionally. And so I'm going to buy it and look for it to get back to that average. And inflation, all these different things can kind of work in the background, and I'm not going to let them talk me in or out of anything in particular. What I will talk to you about to finish up this segment is a little bit smaller of a yield curve spread. And when we talk about sizing up yield curve spreads, what's nice is the small exchange has these pieces in very small products that range from $70 in margin to just about $300 in margin. And so the products themselves are really as small as it gets in the futures world. But when I talk about sizing up yield curve spreads, the bigger the trade, the more amount of duration between the two pieces there are. And so you get smaller with the yield curve spread as you kind of reduce the amount of durational difference. So 2s to 30s, that's big because it's a lot of difference in time. 10s to 30s, that's a little bit smaller because they're closer, and thus they move much closer to each other. And same thing with 2s to 10s. They're closer, and so it's going to be a smaller trade than 2s to 30. So if you want to make it smaller, the NOB spread is at a similar extreme, and you get essentially what I think
points, somewhere around there. 45 basis points.
A similar trade. And you look at the y-axis here, and this is a spread that in 2021 has only moved $300, $400, as opposed to the last one, which has moved about double that. because it is a bigger spread. It's a longer duration. Does that sizing and everything make sense to you?
Absolutely. Yep.
Very cool. I mean, that's all we
average,
have here.
What's the average for this average difference between for the knob spread?
The knob spread is closer to kind of like 70 or 80 basis points, or closer to a full percentage point there. And you can see that's very low as well. And so, I mean, I might not even mind sprinkling 2 long 30s and a short 2 and a short 10, but I don't know. It's up to you. This has just been sizing yield curve spreads with Jermal Chandler, man. This is always a pleasure to have you on here. And how's the other show going? Why don't you plug what you're doing besides this?
Oh, engineering the trade. Oh, it's great, man. I mean, we get on every day and we just, we put things together. We engineer the hell out of trading, basically, is what we do. I mean, that's the long and short of it. And we're trying to have a lot of fun, man. I mean, it's cool. Showing my unique way of looking at the markets and some of the things that I've learned across time, across years. You pick some stuff from here and there, including from yourself with all your astuteness, and just kind of put it together, my friend. And so that's what we got going on, engineering the trade at 1:30 Central, 2:30 Eastern every day.
Love it. Well, you don't want to miss that because, yeah, it sounds fantastic. I love you put a bunch of pieces on the board and then you put them together in one succinct idea. I think it's a great way to trade and a great way to really solve all your problems out there, everybody. Thanks so much for watching here, Small Stakes. Thank you, Jermal, for joining us on Tuesday. We got Splash into Futures coming up next. It's going to be I'm calling it. This is going to be the best one that we've ever had in Splash into Futures. You're going to want to watch this, everybody. Stay tuned. Markets are kind of moving. We'll get some trades, but we'll also have a ton of fun. Stay tuned, everybody. Thanks for watching.